Hi friends, by the end of this video, you are going to learn how to select healthy and low risk penny stocks. Throughout this video, I'm going to use live and practical examples. So every 30 seconds, you may learn something new. So humble request that you watch this video without skipping. Also, please do not like this video until you watch first 3 to 4 minutes, because I'm super confident that if you watch 3 to 4 minutes of this video, you are going to smash the like button. With that confidence, let's get this video started. What you see on my screen is list of more than 4,500 stocks. Our job is to find out low price, healthy, low risk penny stocks. So for that, first thing what we are going to use is go ahead and add a filter called close price. So let us go ahead and type close price and select close price here. I'm going to only consider those stocks that are trading at a price less than 50 rupees. Now you will ask an immediate question to me that Rahul, why are you looking at 50 rupees as a price? So please understand that penny stocks by definition are those stocks that trade at an extremely low price. The low price could be as low as 1 rupee or it could be as high as 50 rupees, 60 rupees. Now there is no strict definition of what should be the upper band here. I can decide what I feel like and you can decide what you feel like. So in my view, 50 rupees is a good price band to look at. Now the reason we want to invest in penny stocks is because these are the stocks that in few years can give you multifold results. So if today, for example, we buy a stock at 40 rupees and in the next 2 years it goes up to 400 rupees, that is where you make extremely high return, but it comes with a huge risk that I'm going to talk about in few minutes. This gives us more than 1900 stocks. The next criteria that we are going to use is market capitalization. So let's go ahead and put market capitalization of at least 1000 crore, right? Now you might have a question that Rahul, why are you considering market capitalization of 1000 crore or more? The reason is very simple. Penny stocks by their nature are extremely risky and we might lose all of our money, right? You do not want to invest in extremely tiny companies because their chances of survival is extremely low. So selecting 1000 crore and more market cap tells me that this company has more chances of survival in a long term. This gives us total 79 stocks. The next criteria that we are going to use is extremely important in cases of penny stocks, and the criteria is the trading volume of the stock. So let us go ahead and add that. So we go to add filter and select last 3 months average volume, meaning that in the last 3 months, what is the average of daily volume that the stock has been trading at? So let us go ahead and add that. Now the reason we need to consider the volume is because penny stocks by their characteristics are not liquid at all, right? Let me give you an example. So if we look at the Taparia Tools example, which is one of the penny stocks that has been on my watch list for a long time now. And if you consider here, look at this period here, which was at around July 2022, it was trading at 12 rupees 14 paise. And if you go down to almost up to February 2023, almost 7 to 8 months, the stock was still trading at 12 rupees 14 paise. There may be buyers in the market, but there were no sellers in the market. By the very nature, penny stocks are not liquid at all. Even if you select a penny stock that you want to invest, you are not going to find the volume. So what is the point? So therefore, I'm going to only select those stocks that have been showing good liquidity on the exchange. And I will only consider those stocks that have been at least giving me 3 months of daily average of 10,000 stocks per day. So let us go ahead and add that, and that gives us almost the same stock, 78 stocks here that have shown me at least some level of liquidity in the market. So far, if you're finding this video useful, please hit the like button so that more and more people can be educated about the investment in the right way. With that, let us move to our next criteria, and the next criteria is going to be promoters holding, which is what is the percentage of the promoters holding in the company. Extremely important in cases of penny stocks. So let us go ahead and add that. I would like to check the pledged promoters holding as well. Let us add that and I will explain to you in a second. So the first criteria comes is promoters holding. So I will only select those companies or those stocks that have got promoters holding of at least 50%. Let us go ahead and add that here, 50%. That gives us roughly 47 companies. Now the question is that Rahul, why are you selecting 50% as the promoters holding? My reason is very simple. If a promoter has stake in the game, majority of the stake is by promoter, that means the promoter themselves are confident enough about the growth of the companies because they're holding on to the stocks of the companies. Now you might have a counter argument that Rahul, what happens about those companies that have got only 20% promoters holding? Are they not doing well? Absolutely, I take your argument, but in cases of penny stocks, please understand, they're extremely risky, and we need to find out the reasons why should you not invest in the company. It's a reverse psychology in cases of penny stocks. If you remember, in our exam days, we will get objective types of questions where you have 4 options, 1, 2, 3, 4. And the way I used to answer those questions is, first I will go ahead and eliminate the wrong answers, because I know this is absolutely not the wrong answer. Very much similar to that analogy, I am going to only select those companies that have got promoter stake of at least 50%. Let us now look at the promoters pledges. So we are going to only select those stocks or those companies where the promoter stakes are not pledged by more than 5%. So let us go ahead and put the 5% here. Now I have explained promoter stakes pledging in my previous videos, but very quickly, if a promoter is pledging their stocks, it simply means that they are taking debt from institutions and they're keeping their stocks as the guarantee in case they are not able to pay the debt back. It means that the promoters do not have any other ways to raise the debt, which is extremely bad from a company's reputation perspective. Therefore, the maximum pledging that I will allow in my stocks is not more than 5%. So I have selected that here. So this gives us total 40 stocks, and now we need to find out of these 40 which are the fundamentally strong stocks. And when it comes to fundamentals of penny stocks, the number one criteria that I use is earnings per share, and in the few minutes I am going to demonstrate one of the stocks and how to use earning per shares to arrive at the valuations of the stocks. So let us go ahead and add earning per share here. So let us go ahead and add earning per share of the stock. Now I'm not saying that the penny stock should be generating more than 50 rupees of earning per share. My simple point is that at least in the last financial year they should have had some positive earnings per share. So for that, what we are going to do is select earning per share as positive. So any stock that has given me more than 0 or positive earning per share, I will take them into the race ahead. So let us go ahead and add that, and we are going to get total 31 stocks that have shown positive earning per share in the last financial year. The second parameter that I want to use is the return on equity from a fundamentals perspective. Let us go ahead and add the return on equity here as well. So let us go ahead and add return on equity. So again, I'm going to only select the last financial years of return on equity. The only reason I'm not looking at last 3 years or 5 years is that in cases of penny stocks, the data is very limited, and also they do not have a track record of producing solid fundamentals over the 5 years or 8 years or 10 years. That is one of the very basic limitations of penny stocks. With that, let us go ahead and select the return on equity as one of the fundamental parameters, and we'll be happy to consider any stock that has shown positive return on equity in the last financial year. So let us go ahead and add that here, and with that we get total 25 stocks that have given positive earnings per share and as well as shown positive return on the equity. The next parameter that we are going to use is total revenues. So let us go ahead and add total revenues. So let us go ahead and look at the last financial year's total revenues. Again, the same logic. I'm not looking at the last 3 to 4 years. We will look at that when we do the individual fundamental analysis, which I will show you an example in the next few minutes. So let us go ahead and add total revenue here. And what we again want is those companies that have given at least positive revenues in the last financial year. So let us go ahead and put 0 here. We are going to get the same list because all of these stocks have generated positive revenues in the last year. And the last fundamental criteria that I want to use is net profit margin. So let us go ahead and add net profit margin here. So let us go ahead and add net profit margin here. So this is net profit margin. And again, with the same principle, we are going to use those stocks that have generated positive net profit margin at least in the last financial year, so that we can check out the kachra stocks from our list. So let us go ahead and add that here. So we are going to say any stocks that have generated positive net profit margin is what we want. This gives us total roughly 24 stocks, and so far we have applied 9 filters to get to these 24 stocks. Now, if you look at these 24 stocks, majority of these stocks are good stocks. So for example, if you look at the first one, you have a look at this one. Last 1 year, it has given 52% return. Have a look at the second one. Again, 47% return in last 1 year. Third one has given 67% return in last 1 year. UCO Bank, again, growing 158% returns in last 1 year. Central Bank of India, 74%. Bank of Maharashtra, 104% return in last 1 year. Punjab and Sindh Bank, 132%. I hope you get the idea. By applying these 9 filters itself, you're going to check out the bad stocks and you're going to shortlist relatively quality stocks. Does this mean that we should go ahead and invest in these stocks? Absolutely not, because Please understand these stocks are extremely risky. Let me give you an example. So let us go ahead and have a look at Jolly Merchants Limited, one of the penny stocks, which is trading at roughly 8 rupees 20 paise right now. If you look at the pricing of this stock, that March 2019, it was trading at 12.11 rupees, right? And then roughly 2021, July 19, 2021, the stock price shot up to 28 rupees. So within almost 2 years, less than 2 years of time, the stock gave 2.5 times returns. And you see what happens afterwards. The stock has fallen down and have in fact given losses. It is now trading at 8 rupees, giving losses to people who invested here at 12 rupees. So what happened there? Simply when the stock appreciated by 2.5 times, people dumped this stock, right? And this happens a lot in penny stocks, where even if for the shorter duration of time, penny stock might have given you good notional profit, but it comes down, tumbling down extremely fast. They are extremely risky stocks. The moment people make money, they dump them. Pump and dump happens a lot in penny stocks. So please be careful. Therefore, the good strategy will be that never invest in one single penny stock. Please remember this. Let me repeat it. Never ever invest in one single penny stock, because the chances of losing money is extremely high. What you instead should do is build a portfolio of penny stocks. So for example, let us say you want to invest 50,000 rupees only in penny stocks, and you come to me and say that, Rahul, I want it to become 5 lakh rupees in the next 2 years, which is good that you're dreaming big, that there is nothing wrong about it. But what I would consider is, do not put 50,000 rupees in one penny stock. Rather find 10 quality penny stocks and put 5,000 rupees each in those 10 penny stocks. The chances of that 9 stocks out of those 10, you are going to lose the money. So 45,000 rupees gone. But that one stock out of the 10 penny stocks, which you have invested 5,000 rupees, have the right potential to become 5 lakh rupees, provided you do the individual research on the stocks. And that brings me to my point that out of these stocks, what we need to do is look at each of those stocks individually, do the fundamental analysis, which I am now going to show you a glimpse of it. I perform a lot of individual checks on the stocks. Let me give you a glimpse of some of those parameters that I use. Again, it is extremely hard to do the fundamental analysis of all those 24 stocks. What I'm going to do is show you few sample checks that I use on penny stocks. Let me now show you how to do fundamental analysis of a penny stock as an example. So let us go ahead and select SJVN Limited as one of the companies. So let us go ahead and click on SJVN Limited. So let's open it here, and you will see that this is a growing stock. No doubt in the last 5 years, stock has appreciated almost by 74%. Now personally, I perform a lot of checks on penny stocks. Here is a sample checklist that you can see on my screen. Again, it is very comprehensive in nature. These are all my checks that individually I do. Now, because the video might get really long if I go through all of these checks, but I'm going to show you 3 very important checks that you must perform in any penny stock. The first one is the EPS or the valuation one. Let me quickly show you a demo of that. So for that, what we are going to do is going to the financials of this company and go ahead and look at the last 4 years earning per share. Okay. So if you look at the last 4 years earning per share, just copy it simply here in an Excel spreadsheet. So for example, now what you need to do is find out the average of this earning per share. So let us go ahead and add that in here and find out the average earning per share in the last 4 years. That comes out to be 3.54. Now what we need to really do is find out the fair value of this particular stock. That will tell you whether you should buy this stock or not, right? So the next thing what we need is the sectoral PE ratio of this stock. So let us go ahead and look for that data here. If you go up here somewhere, we will see that the sector PE of this stock is roughly 17.75. Let us go ahead and get that number here, 17.75. What we are going to do is arrive at the PE of this stock from our perspective, from earning per shares perspective. So let us go ahead and multiply earning per share, which is the average earning per share, multiplied by the sector PE. So that gives us total 62, meaning that the price of this stock should be 62 rupees. And right now, if you look at the stock, this is trading at roughly 45 rupees. Now, the reason we have calculated it this way is because that we know that this stock is earning roughly 3.54 on an average. And if we multiply it by the sector PE, we are going to get 62 rupees. So the fair valuation of this stock is 60 rupees. And now you might jump into the conclusion that, Rahul, if the fair valuation is 62 rupees, let us go ahead and buy this because this is only trading at 46. Absolutely not. In cases of penny stock, or for that matter any other stock, you always need to put margin of safety, right? So for that, what we are going to do is look at this 62 and apply a margin of at least 30%. Let us go ahead and multiply this by 0.30, meaning that 18 rupees is my margin of safety. So if we do 62 minus 18, what we are going to see is roughly it is going to come out to be 44 rupees, meaning that I am not going to buy this stock if it is more than 44 rupees of value. So if we go back and have a look at this, it is roughly 45 right now. So it is trading at a fair valuation from my perspective, but the moment the stock drops at 44, it is potentially perfect buy, provided all other my 15 or 20 checks that I will do are all positive. As I told you and as I explained you, in the penny stocks, you need to find the reasons not to invest in the stock, because then only you can be really confident this penny stock is going to give you money. So this is my first check. This is how I can arrive at the fair value of a penny stock, by putting my margin of safety and by looking at the EPS, by looking at the PE. Now, by the way, if you did not understand any of that, please do not worry. Let me know in comments. I will try to simplify the logic of margin of safety in my upcoming videos as well. Let us go back and have a look at the check number 2, which is the Altman Z score and modified C score. Let me quickly show you. So this is SJVN Limited, and if you come down here, you will see the solvency ratio, which is Altman Z score. What this simply means is that, is this company going to be solvent in the next few years or not? So if you look at this, it is not likely to be, which is called Altman Z score. Again, I can create a separate video on what the Altman Z score is, how to calculate it. We don't need to, because there are tools that are already calculating it. The second parameter that we need to look at is the modified C score. Again, that tells us whether the financial numbers of this stock has been manipulated. And we can see that it is not likely that the financial numbers are manipulated. Again, in the cases of penny stocks, because they are very tiny companies, there are extremely high chances that the numbers are manipulated. So please make sure you're looking at the Altman Z score, modified C score of every penny stock. The third check that I try to do is possibility of giving future dividends. So let us go ahead and have a look at that in case of SJVN. So if we go to financials of this company, let us have a look at the dividend per share history. So in the last 4 years, the company has given roughly 2 to 3 rupees of dividend, which is looking really good from that perspective. Almost here, last year they gave 95% of the earnings as dividends, and prior to that 67%. So again, this is a PSU, I know that. So in cases of PSU, there are chances that the company gives you dividend. So from that perspective, it looks healthy to me. Like this, you need to perform individual checks that you can find out. In the upcoming videos, I will potentially do full fundamental analysis of stocks like SJVN or any other that you would like me to do. I'm not doing comprehensive checks right now for SJVN here, because this is just a sample check. It's not a stock recommendation by any means. And if I start doing the comprehensive analysis of this stock, that itself is going to take me minimum 30 minutes of time, and this video is already getting really long. With that, I hope you enjoyed this video. If you did, press the like button for upcoming extremely important videos. You can subscribe to my channel. I will see you in my next video. Keep rocking.